You've already been through what? Almost 2 hours of talking markets, valuation, regulation. Gustaf and I thought we'd give you something else to chew on as we start this conversation. And don't let him fool you. He's a dyed-in-the-wool Indian. He's lived here for over a decade, and first in Mumbai, and now in Gurgaon, or Gurugram as it's known. So the trickiest question this afternoon he has to answer is, which city does he prefer, Mumbai or Gurgaon?
She promised she wouldn't ask me this, but like I said to you earlier, it's impossible to choose between your children, right? Which is your favorite? So I'll politely decline that.
And that sets the tone for a largely diplomatic conversation. Thank you very much, Gustaf. I think it might be nice to start with a very brief description of what Citadel Securities does in India, what its competitive advantage is, and the size of the market that it seeks to target here.
Yeah, I mean, first of all, thank you, Bloomberg, and thank you, Menaka, for hosting today. I think it's been a super engaging few hours, and appreciative of the opportunity to be able to contribute to the dialogue. So a bit about Citadel Securities. So I think Citadel, obviously we have two entities. We are the hedge fund, and we have the market maker, which is Citadel Securities, which is the business I represent in India and will be speaking from the perspective of today. Citadel Securities, we are a global market maker. We are a US origin firm headquartered in Miami. We make markets across multiple asset classes, including futures, options, equities, fixed income. Globally, we do, in any given day, on average, about $650 billion US dollars of trades, quite a lot. In the US, we're about 25% of all equity flows and all equity transactions. Our APAC business is almost as old as our business. We've been in APAC for about 20 years. Today, we are present across 6 locations, 10 markets, with about 300 team members across the region. Our India business, I think, is something obviously I'm very excited about personally, and I'm here speaking to. I think we very early on realized that to be a serious contender in India, we have to be onshore in India as well. So what we built up over the last 2 years onshore is a onshore market making business here in India. We are a trading member of the NSE, BSE, and MCX. We are very active in cash equities, as well as futures and options. So, we have a very sort of healthy, I would say, balanced business. And then, yeah, that's a bit about us.
Okay, great. I'm going to break this conversation down into 3 parts. One, the structure of the Indian market.
Yep.
Would love for Citadel and your insights on that. Second, regulation, and then finally growth. And then if we have some time, we'll talk about talent acquisition, because that's a hot space as well. Sure. Are the fundamental attributes of the Indian market very different from, let's say, any other peer market in terms of opacity, liquidity, shallowness? What has the experience been?
So I think if I were to characterize the Indian capital markets, and probably maybe break it down to 3, 4, I think, distinguishing features, right? So the first is scale. I don't think you can ignore the fact that India is a very, very large market by whatever parameter you use. Volume, value, I think the NSE, I believe it is still in the top 5 in terms of market cap for any exchange globally. So the opportunity is clearly there, and I think that already sets it in a class of its own with some of the leading markets globally. 2 is liquidity. And so I think you have a market where, and again, liquidity varies by segment, but broadly speaking, you have a market that has very, very deep liquidity in areas like derivatives. In some respects, that makes it the envy of many other markets. I know we talk a lot about derivatives, but we think fundamentally derivatives are a great sort of tool for price discovery and hedging, and I think many other markets would want the liquidity that India has in that sense. I think 3, is actually the market opportunity in India is quite unique as well. Obviously, what we have today is, while we have a very, very deep derivatives market, we also have a cash market that is up and coming and scaling up as well. And we think there's a lot of good traction and good actions being taken on the ground by market stakeholders, but also by the regulator in terms of promoting cash market liquidity. I think other segments are also in the early innings, right? If we look at things like the fixed income markets here, corporate bonds, tremendous growth. MCX over the last year, 100% year-on-year volume growth. So I think while it is already a very, very large market, it's nonetheless a market with a lot of opportunity left on the table in terms of growth, which we're very excited about at Citadel. I think the final thing I would say about India, which maybe doesn't get talked about enough, is actually the safety and the sort of risk management of the Indian market, right? I mean, we are a market where everything is predominantly exchange traded, which means you kind of have highly visible risk, a very well-defined margining framework, centralized clearing, T+1 settlement. So I think there's been a very, very conscious effort in the kind of design of the Indian market structure to not just promote a large market, but to promote a safe market as well, with limited things like, call it OTC risk, et cetera. So So yeah, scale, liquidity, opportunity, and I think safety are the four things I would use to.
You mentioned liquidity in the derivatives market, Gustaf. Do you feel that way about the cash markets as well? That there is adequate liquidity for businesses like you to prosper?
So we are active in the cash market. So in some respects, yes. That being said, do I think that there's more that we can do to promote more liquidity in the cash market? Absolutely. I think everyone is aware of it and working on it. So I think one of the key things, for example, that's a focus right now is the SLBM segment of the market, right? And I think that's something where SEBI, multiple market participants, both on the supply side, in our case on the demand side, are very actively looking at what can we do to make SLBM more effective, to make the cash market deeper. So I think, yes, there is liquidity, but there's certainly, I would say, headroom for more liquidity in the cash side as well.
Okay, I want to come back to that. And by the way, SLBM is the lending and borrowing of securities, which can help also when you want to do short trades, etc. So, but you know, the other big structural trend in this market, if I can call it that, in the last couple of years has been this gush of retail money that's come in. And as some people describe it, set a floor to the market to some extent. You know, and by all conversations, it suggests that this money will continue flowing in, maybe at differing paces, but it will continue. And meanwhile, we've seen foreign investors exit, you know, very quickly and with significantly large amounts of outflows. This structural backdrop, again, is it conducive to trying to build a business in this country? Because you guys entered in 2022. Has that made your work more challenging?
I would say it's made it more challenging. What I would say is, you know, on the call it the retail or the domestic side of the house, right, if you want to call it that, I think that has been a great engine for the Indian capital markets, right? We have a situation where, whether it's via SIPs, DII capital deployment in the country has been very, very high. I think that's been enabled by a number of things that, again, have been very intentional in terms of retail access to capital markets, whether it's eKYC, UPI pay-in, you know, the sort of broad availability of, low-cost brokerage apps. I think that that's a very healthy part of the market, and I think that we find that a very attractive part of the market. I think having retail participation, by the way, it's not just unique to India, contributes to a very liquid and active capital market as well. I think it enables wealth creation on the investor side, which we think is very positive. You need to have the ability for individuals to participate in the success of a country through its capital markets. It also helps with capital formation for businesses as well. So I think that's a great part of it. What I will say is I think a part of that retail, call it story, if you will, as you describe it, is that we also do feel that investor education and suitability is really important as well, that investors are participating in a healthy way for the long-term growth of the capital markets. I think to the second part of your question on FIIs, and you know, I do know that with this year there being kind of a net outflow situation, if you will, a lot of focus is on FIIs. What I would say is at the end of the day, FIIs will come in and they will come out. There's a cyclicality to it. And in some respects, you can look at net FII outflows as hey, investors are actually taking gains, realizing gains. So that's in some respects a net positive as well. I think what we'll see with FPIs is invariably cyclicality. They will come in based on things like whether it's relative value, geopolitical tensions, interest rates. I think fundamentally what's important is that we create a long-term market environment that is conducive to FPI flows, inbound or outbound. And so I think, again, we don't look at India as a last 12-month story. We look at India as a next 10-year story.
All right. You spoke well of the retail participation in India's equity markets. That hasn't necessarily been the reception for the retail participation in India's derivatives markets, right? And in the last year, that is where we've seen the bulk of the regulatory action take place in discouraging or disincentivizing retail speculative activity in the derivatives market. All these rule changes, how much tougher has it made for you to do business? How do you view this regulatory action? And do you think there's more to come? Or do you think that maybe at this point in time, the regulator should leave the market alone for a bit and let it stabilize at these volume levels? We've lost some 40% in volume over the last year.
Yeah. No, I think it's a great question. What I would say off the bat is that regulation in itself is not a bad thing.
Of course not.
I think well-designed regulation is what the market needs. So I'll start by saying...
Has it been well-designed then, in your estimate?
I think that SEBI has come at it with a very consultative approach. I think they've definitely, as Sritu and Kantapande Ji mentioned earlier, sought to actively engage with the market when it comes to forming this regulation. We see that right now, for example, you asked about regulation that is upcoming. This discussion around expiry dates. I think that is something where it's been very clear that SEBI wants to engage with the market and stakeholders to understand, what is the right type of regulation. I think if I were to characterize what good regulation looks like, it's regulation that's targeted. I think it's regulation that is data-driven. Again, we heard about that earlier as well. I think it's regulation that engages with stakeholders and seeks a wide, diverse array of opinions, whether it's through formal consultation periods or bilateral engagement with the market. And I think also critically, it's regulation that comes with sufficient time for implementation. I think what's quite critical, especially with large market participants, that we have the ability to adjust to regulation. What I would say overall, just to kind of recap my earlier statement, is I think the way the regulator here has done it has been very, very collaborative, very constructive. We are supportive of things like investor education, investor suitability, and we look forward to engaging with the regulator as they think of the next set of regulation, which we discussed earlier.
So 40% drop in trade volume doesn't impact your business at all?
Again,
and you'd be perfectly fine and just as smiley if the regulator decided to do away with, let's say, all weekly options and move to monthly options altogether.
I think our view is that having a liquid derivatives market is important for hedging and price discovery.
Right.
I would make that representation. But when it comes to specific regulation around bonds, what I would say is, again, we don't take a next 12-month view of the Indian market. We look at what is the right regulation for the Indian market to be successful in the long run. And that has to be regulation that encourages both institutional and retail participation. So I would say that it's not we don't take a short-term view of regulation, we think of it very long horizon.
Okay, so a quick follow-up to that. So therefore, you don't think this has been too severe a regulatory clampdown?
I think the regulatory landscape is still evolving. I think SEBI is doing what it does, which is engage with the market to try and get inputs on regulation from stakeholders. We appreciate that. We appreciate the opportunity to engage with SEBI. We will keep engaging with them.
All right. The other area we've seen, and my colleague Jeanette spoke about this with the SEBI chairman earlier on in the conference, is the SEBI action or regulatory action against one of your peers, which is Jane Street.
Yeah.
Now, of course, I'm not asking you to comment on that particular case, but there was concern when that SEBI order came out that it could have a potential chilling impact on several large, players like you.
Yeah.
Has it had a chilling impact?
Well, I would start by saying I agree. I obviously can't comment on an ongoing case. I also cannot speak for all of our peers. I can only speak for Citadel Securities. And I think what I would say for us is that it has not. I think we remain committed to the Indian market. We continue to invest in our platform here, whether it's our talent, building up the onshore team, whether it's our partnerships. We work with the IITs to invest in both a GPU and a quantitative finance lab at the IITs. So I think, again, we take comfort in the fact that SEBI operates to try to create a regulatory environment that promotes long-term sustainability in the market. We're supportive of that. We will keep engaging with them. And we are certainly all in on India.
Okay, great. You spoke of investing in India. I'd love to know what do you think are the next big growth opportunities? So if you can paint for us a picture of the size of your current, I know you won't share data, so not specific numbers, but the relative size of your business in the cash markets, in the derivatives markets. What about fixed income?
Yep.
What about commodities? Where are the key growth opportunities for the next 5 to 8 years?
Great question. I think when I look at our business, right, I think what sets us aside is that we have very, very healthy sides on both sides of the house, both in the derivative side as well as the cash equity side of the business. I think if I look at where growth is going to come from in the next, call it 2-3 years in India, and what gets me excited about the market, I think one is something you touched on earlier, which is deepening cash market liquidity.
Okay.
So I do think we are really encouraged by things like SLBM, again, the ability to go short. In some respects, we have a very, very deep single stock futures market because the ability to go short in cash has been somewhat restricted historically. So I think that's exciting for us. Two is something like MCX and commodities. We see tremendous growth there. That's also very exciting. I think longer term for us as well, fixed income certainly is a part of our franchise that we'd like to spend more time on in India as well. And then finally, we have a client business that we run with as well that we'd like to expand to India. So I think a number of avenues, both in kind of existing asset classes and venues that we trade today and want to go deeper in, as well as new ones that as they begin to mature and scale up in India, that we absolutely want to be an active participant in as well.
Can you share any details on what the potential of the commodities business is for a player like you?
Potential in terms of?
Commodities is a very large space.
Yeah.
So are there specific commodities that you're looking at? or, how do you hope to get your feet wet? Like, what will you start with?
No,
How do you
absolutely.
hope to grow? How big a business can that be?
Yeah, I mean, if I look at India today, right, if you, let's say you take non-agri commodities as a starting point, so we can look at, natural gas, crude oil derivatives, very, very active markets. Obviously, gold and silver derivatives, very, very active and large market in India. Again, we're seeing encouraging steps by the regulator. I know it's early days, but for example, the discussion to permit, physical settled contracts to be traded by FPI as well as onshore. Very interesting. It's something we think is conducive to market growth as well. So I would say all of those are very much in our wheelhouse of things we're actively looking at and want to engage in.
Okay, and if I understand this correctly, forgive me if I'm wrong, but you are still talking about market-making activity in all of these new areas,
Correct.
right? There's no prop book involved in any of this.
We deploy our own capital when we trade as well. So again, when we are making markets, we are providing liquidity in the market as principal. That's how we operate in India.
All right, okay. And fixed income is also a significant opportunity for growth in the next, 5-10 years?
I think that's a 5-10 year journey.
It's a really small market for you right now. It's also a small market relatively.
In India, it's a comparatively smaller market, yes.
Right.
So it's scaling up. But I think, we've seen tremendous success in other markets with fixed income. I hope the same happens in India over time.
What do you think will change, like the pace, or will shift your interest in this business?
I think it's continued interest by issuers to look at corporate bond markets over loan markets. I think, again, as that market deepens, it's something we'll absolutely get involved in and get active with.
Okay, so how big a role do you think, or is there a way you can give me the relative size of India compared to, let's say, peer markets in Asia?
You're fishing.
Well, I'm trying to get a sense of how important India is going to be, in the broader scheme of things at Citadel. So how important is India going to be?
Very important is what I would say. I think at an overall level, like I said, for us, APAC has been a very long-standing business, but one that is still a growth engine for us. I think within APAC, very candidly, you can't ignore India. It's a very scale market. Again, I would always say the proof is in the pudding. We put our money where our mouth is. We've built the onshore team. We've scaled the onshore team. So I think for us, India is and will remain a very important market going forward.
Okay, and in the growth opportunities, I forgot to ask you a question about what your view is on Gift City and whether you're looking to open an office there. Do you see potential for growth? So again, is that part of your growth strategy?
Yeah, I think Gift, again, Gift has many dimensions to it. I think it's an interesting opportunity that we'll continue to evaluate. As of now, we're not active in Gift, but it's something we'll certainly evaluate.
Okay. Is there a reason why you're not active? Is it just that you're still very new to India and it'll take a matter of time? Or?
That's right. I mean, our onshore business is about 2 years or so old, right? So I think we are still hands full scaling up the onshore business that we have. I think, like I said, nothing for us is off the table. We look at every single opportunity in India as it comes, and I think there's many of them. For us, sometimes it's more about which do we prioritize, and we're a little bit spoiled for choice sometimes. So it's something that's absolutely on the table. We will evaluate.
You spoke of partnerships with IITs. Yeah. Let's talk about talent.
Yes.
We have time for one or two last few questions. So, what is the talent piece been like in India? I imagine you're sourcing from India, not just for your India ops, but for your global ops. What's the talent strategy? How excited are you about, what India can supply?
Yeah. Well, I think when it comes to talent, I mean, every firm is different in terms of the talent that it looks for and the talent that it wants. If I look at our firm globally, it's an interesting, we're an 1,800 person firm globally, of which 300 have PhDs. So we already lean more towards, call it your STEM deep research type approach to markets. We have a very, very high bar for talent as well. As you can see, we go for quality, not necessarily just quantity. To give you a bit of a reference point, for our summer internship program, the acceptance rate is about 0.5%. So we have a very, very high bar. 0.5. So I think, we take talent very seriously. I think talent and technology are our two competitive edges. And to answer your question on India, yes, absolutely. So we have a partnership with the IITs. We also recruit from the IITs, not just for the India business, but also for our global operations. I think, as you can imagine, India is a tremendous hub for STEM talent and for quant talent. We are here, our competitors are here, so it's a very active talent market as well. So we compete in the financial markets, and we also compete in the talent markets as well.
Are you looking to double headcount in India or quadruple it over the next 5 years?
We're looking to scale it. I can't comment on specific numbers, but we're certainly looking to scale. Like I said, I think we see India as a very clear long-term growth journey. A part of that investment is talent and scaling up that team.
Scaling up is a significant move. It's not like just adding on, on the periphery or marginally adding people, right?
We'll keep hiring. I mean, I think you would have seen in the news. I think Bloomberg covered it very well. We've made a lot of kind of key hires recently. So I think we'll always look to add to talent.
So you're confirming all those numbers?
I'm not confirming anything. I'm just saying we continue to invest. No, we're super excited about the opportunity that India presents. And like I said, that's both from a business opportunity standpoint, but also from a talent perspective as well. I think it's a great place to be. We're super excited about it.
Okay. So then one final question. And we have 9 minutes. You're going to have to speak for 8 minutes in that answer.
All right.
Right?
All right.
Okay, great. It's been a difficult year across the board for businesses, for those invested in the markets, whether they're individuals, retail investors, institutions, for market makers, and those with proprietary books and all of that. How do you see these big macro changes that we've seen, geopolitics, trade, AI, impact the business you're in, the business of markets? And I mean both the shorter term impacts, but also the more lasting changes that you see will take place.
You know, I think if there's anything we've learned from 2025, it's that you can't predict anything, right? We are, I think, in a very interesting time from a geopolitical standpoint, a lot of change. It's been reflected in markets as well. So I think it's hard for me to say that, you know, I know what's next. I think if anything, it's taught us to be nimble, to be agile. AI is a very interesting one. We get asked about it a lot. We think about it a lot, right? If I think of the topics that keep us up at night, AI is certainly one of them. And are we using it the right way? What I would say is that our philosophy to AI is not that more is better, but rather I think we think about it as where are there very clear opportunities for us to apply targeted use cases that are measurable and scalable. We use it internally for many different things, from day-to-day productivity to, for example, code assist tools for our developers. Like I said, we are a engineering-heavy organization. AI has been a key part of that. So it's been an active year, and you know, part of it is these exact themes you talked about, which is managing both external factors, whether they're market-led, or more macro, call it long-term secular themes like AI, which also have an impact on our business and scale and operations.
You know, Gustaf, technology has changed the business of markets so significantly over the last 2 decades.
Yeah.
And the business of trading, it has also created, you know, in ways, asymmetry, right, between the large institutional players, the HFTs, the retail player. Will AI exacerbate those gaps significantly? Will it be very distortive? Do you feel like it might make the small guy even smaller in this marketplace?
I still think we're in the early innings of AI. Like I said, I think there's a tremendous amount of hype about what AI can do and what it does do. I think we ourselves are looking at use cases for it. I think that the democratization of AI is also a key part of the AI story, that it's not just available to large enterprises, but also to individuals. So I think when we think about AI, at least the way we use it is again, very targeted and very specific use cases. It's hard for me to speculate how others use AI. I think I'm always interested to learn more. But we use it in a very targeted manner that, you know, I think we think makes our business stronger as well.